Hey traders, this is Ron Haight at Market Tamer. Happy Sunday. Hope we're having a fantastic holiday weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Qs on a daily chart. The Qs had a nice week this past week. They were up 4 out of the 5 days, and even the down day wasn't that much. If I zoom in here, you can see new all-time highs, essentially. Even the weekly charts are looking good. Now, I will say this, though. Monday, the U.S. markets are closed. Often, Labor Day can mark a temporary high, and then we end up into a consolidation or pullback into the middle of October. It's from a seasonality perspective. But until a pullback develops, we're above the major moving averages, just like we are here on the Qs. Remember, the blue line is the 5-day EMA. The red line is the 20-day EMA. The orange is the 50-day. The purple is way down here, the 200. We're above everything. So the Qs are doing just fine. If we take a look at the small caps, the IWM, nice little update on Friday, new all-time closing highs. It was basically a doji festival pretty much all week until Fridays pop into the holiday weekend. That also gives you an idea of the mindset that the bulls were willing to go near the highs of the day into a 3-day weekend. If we sell off into a 3-day weekend, it sort of tells you, well, maybe the bulls aren't as confident as they would be if they closed at the highs. Well, they did close at the highs. Now, if we take a look at the MDY, which are the mid caps, they actually opened up below the 5-day, but they got back above it. New all-time highs. These guys look just fine. You take a look at the Dow with the diamonds, the DIA. Now, the Dow still is not at new all-time highs. We're flirting with them. And the 5-day was at 259.85. We finished at 259.85. Right on the button, so technically we're good here too. Monday, Tuesday, Wednesday we're bullish. Thursday we pulled back, and then Friday was basically a doji. Now the SPY, which I have a long-term bullish position in, we're at new all-time highs. We're above the 5-day. This thing here is looking good too. Also nice volume. It wasn't the end of the month, but it was still nice volume. If a pullback were to develop, we're going to keep an eye on the 20-day. Even if the S&P dropped 30 points on SPX dropped 30 or $3 in the spiders, I'd still want to get below the red line, and that's at 286. It's about $3.50 below where we are now. That will be the first sign that something could potentially be wrong, and then we go to the 50-day. We close below the 50-day in orange, then we start coming all the way down to the 200. So there's a lot that needs to happen before the bears could even think about saying, ooh, maybe the seasonality is going to play and we're going to have a little bit of a pullback into the earlier part of October. But right now, bullish, and more bullish. Here's the VIX. We're down at 12.86. We'd have to get above at least a previous high, maybe around 18 or something. This is also very bullish for the markets. A bearish VIX, bullish markets. Now here is gold. We haven't looked at gold and silver in a while because why? It's just not the time that they shine. I was warning you guys once we got below the 200-day, the summer does not bode well from a seasonality perspective. It's not me that says that. It's just the seasonality that says that. And we moved lower. We're getting a bounce here, but if you notice, we just can't stay above the red line, and now we're back below it. So GLD is bearish going into this week. If we look at GDX, which is the gold miners, this is still a bear flag. We had a rally, rejected at the red line, and now we're coming right back down. In fact, what I'm going to do here is change this to a 6-month chart. It'll make it a little bigger on the screen so everybody can see it easier. There you go. Watch out for those lows below there, bearish. Now, silver, SLV, bear flag. Cannot get above the red line even when we're trying to bounce. It just isn't happening. Then if you look at SIL, which are the silver miners, try that again. Rejected 20-day. Metals remain bearish. Looking at bonds, TLT, I'm going to go out to a 1-year view, and you can just see it's a big choppy mess. I have different supports drawn in, bigger trading ranges. It's just really hard to get a bigger directional move right now. So maybe like iron condors of some sort, we're going up here, maybe bull puts, but frankly now we have a little short-term double top and a reversal on Friday. Maybe bear calls up here, maybe bull puts down here, of course, as a virtual trade, not real money. Now, taking a look at some individual stocks here to keep an eye on. These are stocks we visited in the past. Now, here's Walmart. We had the earnings move up. I already talked about this in a previous video, how the big move already happened and the gap fill occurred essentially. But we pulled back to the 5-day in blue. Then we had a bounce up on the 28th, which would have been Tuesday. That was looking nice. Then Wednesday, Thursday, Friday, dojis. What I could do here is change that blue line from a 5-day right there to either an 8-day or just use the red line as a potential trailing stop, with the target being the previous highs at 107.50, which are, 11, 12 bucks higher. That's not a bad reward to risk ratio with a somewhat reasonable tight stop in theory. Remember, stops don't always work because Walmart could gap to zero or it could just gap down in here, for example. Then that theoretical stop is blown through. But on paper, that's not a bad stop. The 20-day right now is around 93.71. It's not too bad, about $2 lower. How about Hershey, HSY? Besides fantastic chocolate, the stock gapped up on earnings, hit the red line, hit the purple line, institutional moving average, 200-day. We tried to get above it, rejected again, but now look what happened when I zoom in here. Hit purple, came down red, hit purple, came down red, but we're getting higher lows. Then we poke up, we get up to here, we poke above these previous highs. Now the target is a gap fill up around 107, still 7% potential upside. We also have the 200-day in purple and the 20-day EMA in red now coinciding. That could be my point of a stop now, a trailing stop or a fixed price stop, and see if we can catch a nice little rise up there, again, from an educational perspective. Johnson & Johnson. I'm going to stick with well-known companies this weekend. So here's J&J. We had our move up. We broke above the high in March. Instant consolidation. Target is 145. Still 10 bucks or so higher. Given how the red line has been acting pretty well here, I consider using that as a potential end-of-day trailing stop. And then here's Government Sachs, GS. Look at the purple line. Rejected here and rejected here. If we get above the purple line, the 200-day institutional moving average, immediate target is 260 and then up to 270. If we can break above the 200-day, I would probably transition into a 20-day EMA as an end-of-day trailing stop at that point. It doesn't work perfect, but you got to do something for a potential stop in my book. So I want to keep an eye on GS. So that's it, folks. I'll have videos out this week. Remember, the market is closed in the U.S. on Monday, so we'll have 4 days of trading. Also, I'm going to be having a special webinar. We're going to talk about seasonality, so keep an eye open in the emails I send you, as well as I'll put a blurb in the video too. It'll be a free webinar that I'm going to host, and I think everybody should be there for it. All right? Have a great day, folks. See you in the next video.